Morning traders. I want to put a little bit of a broader perspective on natural gas before we start getting into the nitty-gritty of what's going on today. I've drawn a weekly chart and I've kind of scrunched up the x-axis to make this look a little bit different. I've got it going back to as far as 1991 on here. It doesn't go really much further on these TradingView charts, but have a look at where this ranges between the two green lines. We're at the bottom of this range, and you can see the range is roughly between 3.75 and 2.15, and we're right at the bottom of this range. I could put another line down at the bottom here at around about the $1.50 region, but let's just leave that out for now. You can see that's the very bottom, and that's why I've been saying that the price could get down to $1.50 or so, but let's leave that out for the moment and focus on the range that we're in now. There are two things I want to point out to you. Natural gas spends most of its time, or at least a lot of its time, between $3.35 and $2.15. In fact, if I move that down to $1.50, you can see that it spends an awful lot of time in this period with brief spikes above. And what's also interesting is that when we have had a spike above, like we did in the year 2000, that's been followed up by several massive rallies in the years thereafter. I'm going to move the line back up to where we are at the moment at around $2.15. That's where the current price is. And you can see that when we get to these lows, remember this is a weekly chart, we often spend quite a lot of time there. I'm going to kind of ignore the period prior to 2000 because I'm going to account for different economic conditions during those years and also for potential increase in the price due to inflation and fluctuations in the US dollar. And some of this is also dollar related, bear in mind. So we have to consider the currency factor in this. The point is, though, that when we get down to these levels, we don't often reverse immediately. So if we zoom into some of these areas here and look at how long we've spent down there at those lows when we've got there, you can see in 2001 and certainly prior to that, but we're going to ignore that, we spent several weeks down there. We made a double bottom on this occasion, came back to visit it, spent several weeks again down there, and it's difficult to see, and I don't want to faff around with the charts too much, but there you can see quite a number of weeks, 4, 5, 6 weeks, maybe 2 months in this region. Same again over there. And if we scoot back to the next time we visited this price area, over there it was about 3 or 4 weeks. And then over here, going back to 2012 and 13, you can see perhaps 23rd of January, we didn't really take off from the bottom until about the 14th of May on that occasion, and then we revisited the same level once again. In fact, on this occasion, we had 3 dips at the low. And then going into 2016, look how long we spent at that level, more or less the level that we're at now, at this green line. And that was from November all the way through to June the following year. So that was a period of 6 or 7 months spent at that low. Then we come across to 2019, and then we actually spent a couple of years at these levels, bouncing repeatedly along, slightly below, slightly above, bouncing off, bouncing down. And that period of consolidation around the level that we're at now was from June 2019, and we only got liftoff really about 2 years later in June 2021. So natural gas can spend prolonged periods in and around the $2 level. That's all I'm trying to say to you before we have these sort of periods of liftoff. We're right back there now. We have formed a potential double bottom, but we haven't tested the top of the range yet. And that top of the range is where we want to see natural gas moving back to at some stage in the future. You can see the 20-week moving average is hovering around $3.75 right now as well. So it's always good to look at a broader perspective of the chart. And if I once again sort of zoom right out, you can see these prolonged periods spent at or around the $2 level before we move back into these highs. It's not very often that natural gas is actually above $3.75. It's happened between 1991 and the year 2000. It only happened on one occasion. Then a brief spike during 2001. Then a prolonged period with this massive number of spikes, sort of a jaggedy heartbeat type pattern, massive rallies all the way up to $16, and then another attempt, and zigzagging around here for a long time. And that period lasted from February 2003 until August 2009. So that was a 6-year period of massive gas prices. Remember what I said earlier, that currency fluctuations and various political, geopolitical events affect all of these things. I don't know exactly what was going on in here. Some of the cleverer people who are following my videos will know, all about it. I could go and do some research on it. But then we fell back down towards $3.75 and then eventually back in there. And then between 2012 and 2022, we only had a couple of periods when we were above $3.75. And then from late 2021 and during last year, we had this massive rally up into $10, caused in part by things like COVID and the relief of COVID, Ukraine war, and various other geopolitical factors and currency fluctuations. And now we're back down to the bottom of this range. So don't think that natural gas is going to automatically rally up from these lows very quickly, because often it gets stuck there for quite some time. And also don't think that we're going to be looking at prices at around $5, $6, $7, $8, $9, $10 very often, because that's an anomaly rather than a norm. So bear all of that in mind now when we have a closer look at the charts and where we are today. All right, so now that we've had a look at the broader perspective on natural gas, let's look at this current chart. I've moved this range slightly outwards. As the market has started to move around a little bit in this area, the range has broadened and the distinctions within the range have become less well defined. So I've now moved the range to the top of yesterday's move, and I've kept it down here just above $2. And I've cut off the wick of this candle 2 days ago that broke below $2. Right now, we're still in the middle of this mini range, and we've got all these ranges above us before we get to our target of $3.75, which you've seen from the broader perspective charts which I showed you earlier. At the moment, although we've broken above this trend line, we're not showing an awful lot of strength. This is a rather good trend line. It touches these highs rather beautifully. And yesterday we broke up above that. I did make a small error. This gap here was caused by the rollover of the markets from contract to contract. You can see we went to the May contract on the futures, and that's what caused the gap, because the May contract was slightly more expensive. So I made a little faux pas on that. I knew what was happening, but I didn't communicate it properly. However, this does affect things like Boyle and UNG. Those of you who are trading those will have wondered why the price suddenly moved higher or lower, depending on what you were trading. So we've broken above this trend line, but we haven't broken out of this very first mini range, and we're not showing any signs of strength at all. There was a lot of excitement as we moved up slightly higher above the trend line, broke up through there. It looked like a gap. It wasn't a gap. It was the futures contract rollover, and we touched there. And now today we've just fallen back down in again, showing further weakness. No real inclination to move higher. Remember, we can stay at around these $2 levels between the range of $3.75 and $2, and potentially even $1.50, which is the bottom of that broader range you saw on the weekly chart. That's right down here on the daily chart beneath us, right at the bottom there. And there's the $1.80 level, which is the other support level. So we've got these two support levels below us, 180, 150, and we could very well move to those. I don't know. Now, what's happening today is if we manage to touch the top side of this downward trend line and then form a convincing reversal and hold above this mini range here, that will be a very small, smidgen, micro fraction of hope that natural gas might move higher. However, having said that, I'm not a great fan of trend lines overall. It's nice to have them on the chart. They're useful in some respects. But most of all, markets, including all other markets, respond to horizontal lines of support and resistance more than they do anything else. And you can have Fibonacci lines, you can have trend lines, you can have moving averages, all of those sorts of things acting as support and resistance, but it's better to use them as confirming indicators rather than your primary indicators. The most important indicators are the support and resistance lines. So if we do manage to hold above the top of this trend line, move back, break through the top of this mini range, back test it, hold above it convincingly, then I'll be looking to continue my long trade. Now remember, I'm hedged short from $2.95, long from $2.10. Those are equally sized positions, so no matter which way the market moves, it makes no difference to my profit. And I'm currently in profit on both trades. Barely a fraction of profit on this trade, and quite a lot more on this trade that is short from the top. I'll start to adjust my hedge as soon as I see signs of reversal, convincing signs of reversal and a move to the upside. Remember, we could stay down at these levels for a very, very long time. Now, I know a lot of you are long, holding long positions. I know some of you are long from $2.50, from $2.70, even from $3.50. And this is incredibly frustrating. It's nerve-wracking and it's scary, and it's a terrible situation to be in. I've been in it before many years ago. It's not nice at all. But the reality is we could stay down at these levels for an awfully long time, and you have to be aware of that. and decide what you want to do with your positions. People have asked me why I use a hedge trading strategy when trading natural gas. And there are a couple of reasons for it. Once you're in a hedged position, like I am, particularly if you're equally hedged, you can sit back, relax, smoke a pipe, if that's what you're into, drink a cup of tea, go for a walk around the block, have a nap, read a book, whatever you want to do. And whilst you're in an equally hedged position, you don't have to make any rash and rapid decisions. So hedging buys you time, but it also takes away a lot of the psychological pressure from trading. Trading's a really funny thing to do because what we do when we trade, we deliberately take money out of our pockets or our bank accounts or wherever, and we put that money at risk on purpose. It's a very strange thing to do, which goes completely against human nature. We don't like to put things at risk, particularly not money. We don't like to put it at risk, but when we trade, we're deliberately putting money at risk. If you've got a 75% win rate on your trades like I do, you know that a quarter of the time, the money that you've just put on the table is going to be lost. That's just the reality of trading. And those, as I said in the previous video, are the fees that you pay for trading. But it goes completely against human nature. And what hedging affords you the ability to do is to eliminate some of that psychological trauma that you go through when you enter a trade and when you're in a trade. That fear of loss, the greed, the anxiety, the nervousness, and the fact that you're basically at risk the whole time you're in a trade. When you hedge a trade, you take all of that away and you afford yourself time to make decisions. Hedging's really useful when you have an overall direction for the market. Like I think, and I'm pretty sure, that at some stage, we've seen why on the longer term charts, natural gas will go up to $3.50, $60 or $70. I don't know when that's going to happen. And that's why I'm now in a hedged position. And people say, well, why don't you just close your hedged position and take your profit? And there's a reason for it, because I want to be able to have the flexibility to remain in the market and add to the long side of my hedge if I see the market moving convincingly higher. I don't want to be out of the market, but I don't want to be net long at the moment. So by hedging, I can remain active and a participant in the market, be part of the market, but I can do it without picking a direction right now, without adding to the long side. And I can choose the time and the place on the charts when I want to do that, when I'm in a hedged position. If you're trading with stop losses and take profits, it just adds an enormous amount of anxiety and stress to your trading, which is not needed, because sometimes you're in the market, sometimes you're out of the market, you've actually lost money in your account, or you've made money, you don't know what to do. And the whole thing becomes a terrible whirlpool of emotion in a pursuit that's stressful to begin with, because you're deliberately putting risk on every time you take a trade. So, having said that little ramble, what are we going to do? Well, I'm going to wait for a reversal. First of all, I'm going to be watching the top side of this downward trend line, which is also the top side of this previous candle, the one that dipped down to about $2, that candle there. So if we dip down to that level, probably around, I don't know, $2.10, $2.08, $9, $10, that will be the top of this candle and the top of the downward sloping trend line. We'll see what happens there. If we do see a reversal from here, I want to see a break and a close above this first mini range top, a back test and a hold above it, and then a move back into this mini range. At that time, I'll start to consider adjusting my hedge and adding more weight to the long side. Remember, we've got the 20-day moving average just above us in this next mini range. And then when we get to this range, $2.65.70, we've got the 50-day moving average just lurking around there. Natural gas has got an awful lot of work to do before it gets back into the $3.40, $50, $60, $70 range, the top of that broader range we saw in the weekly chart. We've got to get through 4 mini ranges first. The one that we're in right now, at the top at around $2.20. Then we've got the next one with a top at around $2.40. And then this one at $2.65, $2.70. Then we've got the big $3 number, the big round number where we had a fierce rejection, a massive gap down. It's going to be really tough to get through $3. And only then will we have a shot at getting to $3.60. So there's a huge amount of work for gas to do before we get anywhere near $3.40, $50, $60, $75. Don't think we're going to get through that range top easily. These moves up through $3.75 take place fairly infrequently, and remember that they're an anomaly rather than the norm. And above here, by the time we get there, we've got the 100-day moving average sort of trundling down on us. It's going to reach that $3.75 level in a number of days' time and form even more resistance. But before we even think of getting there, we've got so much work to do to get through these green layers above us, and there is potential that we could even move lower in coming days down to $1.80, and then the very bottom of that broader range at $1.50. So unfortunately, it's not looking great for natural gas longs. And for those of you who are holding, once again, I feel terrible for you. It's a terrible feeling. It's debilitating. It's really unpleasant. And for your sake, I really hope natural gas rallies up. And you need to carefully consider what you're going to do with your positions if we do drop down below $2, down to $1.80, and potentially $1.50, all the way down below us, down here. Well, good luck. I hope you enjoyed that and found that useful. And if you're new here and you're interested in natural gas, please subscribe to the channel and press the notification bell. And bear in mind, we also trade other things. We trade commodities, we trade stocks and Forex and metals, all sorts of things. So if you're interested in the markets in general, subscribe to the channel, press the notification bell, and I'll see you in the next video.